For centuries, precious metals like gold, silver, and platinum have fascinated people, not just for their beauty, but for the powerful roles they play in our lives and economies. These metals have been treasured by ancient civilizations, used as currency, and even sparked exploration and conflict. Their allure goes far beyond their shine. Today, they're deeply woven into the fabric of the global financial system, influencing markets and economies around the world. They're more than jewelry or industrial materials. They're a way to protect wealth, especially in uncertain times. People often see them as a safe haven when other investments feel risky or unpredictable. Understanding their price movements is like reading the economy's weather forecast. It hints at what's coming, from inflation to big business health. When precious metals rise or fall, it can signal shifts in confidence, policy, or even global stability. Precious metals aren't just for investors. Anyone curious about money should pay attention. Whether you're saving for the future or just want to understand the world better, these metals matter. Their prices move daily, reacting to global news, government decisions, and economic reports. Even a single announcement can send prices soaring or tumbling. Unlike paper money, you can't print more gold or silver. Their scarcity gives them lasting value. This limited supply is a big reason why they're trusted across generations. When people worry about their currency, they often turn to something tangible, like gold or silver. These metals offer a sense of security that digital numbers in a bank account sometimes can't. Precious metals act as a pressure gauge for the economy. When inflation or uncertainty rises, so does their appeal. They're a barometer for trust in the system. Buying gold or silver is like an insurance policy against economic turmoil, a strategy used for generations. Families pass down coins and bars as a way to preserve wealth and history. In this video, we'll break down what happened in the precious metals market this week, explain key terms, and show what these moves mean for you. Whether you're new or experienced, you'll find insights to help you make sense of the headlines. Our goal is to make this world clear and empower you with knowledge so you can navigate the world of precious metals with confidence. This week in precious metals was anything but ordinary. While gold usually takes center stage, it was silver, platinum, and even palladium that stole the spotlight. Gold's price hovered near record highs at $4,326 per ounce, but only gained a modest 0.4%. Silver surged to $65.83 per ounce, up 6%, its fourth straight week of gains. Platinum jumped 10.5% to $1,137 per ounce, signaling a major shift in investor interest. Palladium exploded 14% to $1,709, driven by its crucial role in car manufacturing. These dramatic moves show that not all metals react the same way. Each tells a different story. Gold, the traditional leader, took a back seat. Silver and platinum, often seen as secondary, became the stars. Palladium, the industrial workhorse, outshone them all. Next, we'll explore why silver and platinum suddenly became so attractive compared to gold. The market split wasn't random. It was a reaction to economic news and shifting investor sentiment. What's a safe haven? Think of it as a financial shelter when economic storms hit. When investors sense trouble, like political instability or recession, they move money from risky assets into things that hold value, like gold, silver, and platinum. These metals can't be created at will, making them trustworthy in a way paper assets aren't. This week, worries about the US and global economies sent investors flocking to precious metals. It wasn't just fear, it was a calculated move to preserve wealth. When the outlook is uncertain, protecting capital becomes the priority. This surge in demand was a key driver behind the price jumps we saw. The desire for security in uncertain times remains one of the most powerful forces in the metals market. Precious metals react quickly to economic news, especially inflation, jobs, and central bank decisions. These factors are closely watched by investors, as they can dramatically shift the outlook for gold, silver, and platinum in a matter of hours. Inflation erodes cash's value, so people buy metals to protect their purchasing power. When the cost of living rises, metals are seen as a safe store of value, offering a hedge against the decline of paper currency. This week, US inflation data came in softer than expected. That means prices aren't rising as fast, which can shift market expectations for interest rates and economic growth. Normally, lower inflation might hurt gold, but investors saw it as a sign the Federal Reserve could cut interest rates soon. The market quickly adjusted, with traders betting on a more supportive environment for metals. Lower rates make non-yielding assets like gold and silver more attractive. When savings accounts and bonds pay less, investors look for alternatives that can hold or increase in value. Rising U.S. unemployment claims added to economic worries, hinting at a possible slowdown or even stagflation. Job losses can signal deeper problems in the economy, making safe haven assets even more appealing. This double dose of bad news fueled safe haven demand for silver and platinum. Investors often flock to these metals when uncertainty rises, seeking both security and potential gains. Central banks, especially the Fed, have huge influence. Just a hint of rate cuts can send metals soaring. Their policies ripple through global markets, affecting everything from currencies to commodities. The expectation now is that the Fed will cut rates sooner and more aggressively, boosting metals' appeal. Investors are positioning themselves for a new phase in the economic cycle. This mix of softer inflation, rising unemployment, and central bank signals poured fuel on the fire for precious metals. It's a perfect storm that has driven prices higher and increased volatility. Investors are betting on metals as both protection and opportunity. They see a chance to shield their wealth and potentially profit from market swings. That's why we saw such dramatic moves this week. The metals market is highly sensitive to every new data point and policy announcement. The metals market is a real-time reflection of economic hopes and fears, capturing the world's shifting outlook with every tick of the price.
If all precious metals benefit from uncertainty, why did silver and platinum outperform gold? Gold is expensive and near record highs, making further big gains seem less likely. Silver and platinum are much cheaper, $65 and $37 per ounce, so they're more accessible to smaller investors. Both metals have a dual identity, safe haven, and industrial workhorse. Silver is vital for solar panels and electronics. Platinum is key for catalytic converters and chemical refining. This industrial demand adds another layer to their appeal. Investors see them as both protection and growth opportunities, especially with supply concerns looming. Their unique mix of safety and industrial use made them the perfect assets for this week's climate. That's why they surged ahead of gold.
Another big driver for silver and platinum was talk of supply shortages. Mining new metals is slow and costly, and recent years have seen little investment in new projects. Silver demand is booming thanks to green energy, solar panels, and electronics. Platinum faces production issues in key countries like South Africa, pushing it toward a supply deficit. When buyers expect shortages, they rush to secure supply, driving prices up.
This anticipation of scarcity makes silver and platinum look like growth assets, not just safe havens. Unlike gold, much of their supply is consumed by industry and not recovered.
The market's realization of potential shortages added a powerful tailwind to their prices. Investors are always searching for bargains, and this week, silver and platinum looked undervalued. The gold-to-silver ratio, how many ounces of silver it takes to buy 1 ounce of gold, was unusually high, signaling silver was cheap. Many investors bought silver, betting it would catch up to gold.
The same logic applied to platinum, which now trades at less than half the price of gold, despite often being more expensive historically. With supply deficits looming, investors saw platinum as a prime opportunity.
This search for value is a constant in markets. Comparing assets to their historical relationships can reveal hidden opportunities. This week, silver and platinum's on-sale status attracted buyers and fueled their rallies. Market moves aren't just about fear, they're about spotting mispriced assets. Value hunters were rewarded for looking beyond the obvious. To truly understand the precious metals market, it's important to see how gold, silver, platinum, and palladium each play a unique and vital role. These four metals, often called the precious quartet, have distinct characteristics that set them apart from one another, both in terms of their uses and how they respond to market forces. Gold is the ultimate safe haven, stable, with little industrial use, and driven primarily by investment demand. It's the metal people turn to in times of uncertainty, prized for its ability to hold value when other assets falter. Silver is the hybrid, a safe haven and an industrial metal. with over half its demand coming from industry. Its dual nature means it can benefit from both economic growth and market stress. When the economy is strong, silver's industrial side shines, powering electronics and solar panels. When it's weak, its safe haven side takes over, attracting cautious investors. Platinum and palladium are the industrial specialists, crucial for catalytic converters and highly sensitive to the health of the auto industry. Their prices often move with shifts in car production and environmental regulations. Platinum is used more in diesel engines, while palladium dominates in gasoline engines, reflecting changes in automotive technology and consumer preferences. Both metals can attract significant investment flows, especially when supply is tight or when new regulations impact demand, making them volatile but potentially rewarding. Palladium's dramatic 14% spike this week was fueled by a mix of surging industrial demand and growing fears over supply shortages, highlighting its sensitivity to global events. This week, silver and platinum found themselves in the sweet spot, offering both safety for cautious investors and growth potential for those seeking returns. Gold moved modestly, reflecting its role as a steady anchor, while palladium's industrial focus led to the biggest jump among the quartet. Understanding these differences helps explain why precious metals don't always move together, even when headlines suggest otherwise. Each metal's unique personality shapes its market moves, offering investors a range of options depending on their goals and the economic climate. What can we learn from this week in precious metals? First, asset prices are signals. Silver and platinum's surge reflects economic anxiety and bets on central bank action. Diversification matters. Even within metals, performance varies wildly. Spreading investments across different assets helps protect your wealth. Value matters too. Those who looked beyond gold and saw opportunity in silver and platinum were rewarded. Always compare assets to their history and peers before investing.
Most importantly, knowledge is your best tool. Understanding why prices move empowers you to make smarter decisions. The story of metals this week is a real-world lesson in economics and financial security.